Everyone, and welcome to Admiral Markets webinar of this is the mistake 8 December 2014. I will correct this immediately, and sorry for a little bit of misinformation at the main registration screen. There were some problems obviously, and definitely it was not up to me. That was basically a slight mistake for scheduling the webinar. Webinar is always at the same time. So now it's 5 GMT, so it's actually 6 Central European time, and we always started at that time. So the same time always until it's definitely, if I call it otherwise. So this is the time for our webinars. And sorry again for all of you who got into that wrong schedule. And today I made a post on Twitter saying that basically we start always at the same time. So hope that you've seen it all. And I see also some newcomers, so I will definitely try to be precise pretty much. But this time it was not up to me. So before I begin, as always, our standard risk disclaimer, then we can proceed with our webinar. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Risk disclosure statement stating all possible risks associated with the Forex market. By accepting this risk, you're also proceeding further with me. Admiral Markets Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author, it's me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not a .co.uk website but a globalnews.com website. Forex is risky business, and this should not be taken as advice. It's a personal opinion only, and this webinar is for informational and educational purposes only. So with having said that, we are ready to proceed. Just a fast a look at the mistake. So this is 5 p.m. GMT. So it basically there was a slight mistake if you sign up. Let's say you want to sign up for the webinar, and basically this would be like, it would be read like this: 7 p.m. to 8 p.m. So actually we are always starting at 6 p.m. Central European time. So basically, sorry for if you got wrong information. Also on Monday, December 15, we will be having our webinar at 6. So this time, guys, please. And if there are some people who actually are not available because of this misunderstanding, I'm very sorry. But again, webinar is always at 6 p.m. until I made a post about it or something changes, but still we are having it at the same time, 6 p.m. So, okay, sorry for that. Yeah, Justinia is saying last week was the same with Chris' webinar. There were some mistakes in webinar scheduling, but that will be solved. Believe me, I'm working on that. I already talked to guys, and you know, there is always a statement: who works, you know how it goes. If you work, you will get wrong. So those people who basically don't work cannot get wrong. So everyone who works get wrong from time to time. So basically, just for all of you, yeah, it's normal. It happens. So 6 p.m. our standard time. This is a mistake. Okay. So let's continue. Okay. All session recap trades and analysis is done with Camarilla MACD, my proprietary method. For this session recap and every other session recap, it's definitely that if we enter within 5 to 10 pips of the predicted level if it's in agreement with your system. I need to say that because there are many times that people definitely get other signals with their own systems, because Camarilla MACD is price action, and I know that many of you trade basically indicator-based systems, but it doesn't matter. If you follow me, basically these are all my trades. It's okay. And also if you for example have also a signal from your system which is in alignment with the signal from my Camarilla MACD. That is basically a double confirmation for you to open a trade, right? So all session recap trades and analysis is done with Camarilla MACD. So you need to give a price a breathing room. You can enter within 5 to 10 pips of the predicted level if it's an agreement with the system. Respect your stop loss, okay? We always take one position, whichever hits first. It's either position trade or alternative trade. We don't take both positions, okay? So we take one position, whichever hits first, either position trade or alternative trade. We don't take both positions. If you're buying at the spread, so if you want to buy GBP at 63.50 and your spread is 2 pips, you're effectively buying it at 63.52, okay? You're always adding the spread to the buy price. And you're adding the spread to your stop loss. So if you're selling, you add the spread to your stop loss. So let's say that you're selling GBP dollar 63.25 and stop loss is at 63.55. So if the spread is 2 pips, then your effective stop loss is 32 pips, 63.57. Very often I even don't do that and I leave stop loss fixed at 30. Sometimes I include the spread also to my stop loss if I see that it's very close to a previous, let's say, swing high or swing low. Due to volatility of the market, usage of trailing stop is highly recommended. How I do the trailing stop? I don't do automatic trailing stop which is integrated on MT4 platform. I usually put my trailing stop manually. So let's say that I am 30 pips in a profit, I would put my stop loss to, let's say, break even plus 25. And if it goes to 40 pips of a profit, I would move manually to break even plus 35. Okay? So it's up to you how you will manage the trade. But usage of definite trailing stop is highly recommended. These session recaps are helping you to better understand the structure of the intraday trend. If we see that, if I put the analysis and I say that the trend is bearish, then the trend is definitely bearish because we are doing these trades for today, tomorrow, and sometimes the day after tomorrow, okay? So these setups are valid for today, tomorrow, and sometimes the day after tomorrow, unless I said it otherwise. Pay attention to my Twitter updates. I always update my entries, possible entries, so please pay attention to Twitter updates, okay? In addition to these session recaps, you can read my analysis every single day on Forex Factory and Admiral Markets. Those are my primary sources, also Forex Street, okay? So Admiral Markets blog, Forex Street, and Forex Factory website. I also post on Worldwide Investment, but basically my primary social networks are Forex Factory, where I run Spiders Den Thread, then Admiral Markets blog and Forex Street, okay? So those are my primary social websites, and my primary social conversation is done by Twitter. But you can also use emails. You can also write Admiral Market support for something if you want to have from my previous webinars. And of course, you're welcome to make a conversation on Forex Factory, of course, Spiders Den Thread. Last recap results that which happened on the December the 1st, 2014. Those are the results. Euro dollar, we got a loss on euro dollar. It's minus 35. GBP dollar, which was definitely the trade of the week, plus 150 total pips. AUD or Australian dollar was good for plus 20 to plus 60, depending where you entered. Dollar yen was good for plus 15. New Zealand dollar was good for plus 90. So trade of the week definitely was GBP dollar. And this is total pip pool. So this is the maximum available pips from last week. So it was available 290 pips, and I would be happy if you managed to get 10% of this. So 20, 30 pips of all these setups, those are free pips, free money. So if you got 10, 20, 30%, that would be really, really good. But definitely the trade of the week was GBP dollar, which hit basically our target, and it was very good trade. Okay. So let's see what last week brought us. So euro dollar, it was positioned buy around 24.55. This was the time of our webinar. I will mark it with a vertical red line. So 1st of December, 7 o'clock. We wanted to buy at 24.55 or sell at 25.20. 25.20 was never hit, unfortunately. It was never hit because you can see this is the time of our webinar. But 24.55 was hit, okay? 24.55 was hit. I will delete this line, okay? And you can see what happened. Basically, the price rejected a little bit of this level, but that was not for, that was good for nothing. So this is a loss. This was a loss. A loss trade, and basically you can see the price hit our stop loss pretty much quickly. So euro dollar was a loss. GBP dollar was definitely the best trade for me. Definitely the best trade for me. You can see that this was the time of our webinar, so you could have entered during our webinar at this sell. Guys, can you just confirm that you can see my screen? Because Maya is saying I don't see the presentation. Please confirm that you can see my screen. Now it's GBP dollar. Yeah, Maya, you can restart your computer. If you cannot see the presentation, it's probably up to the computer. So thank you, guys. Thank you for fast confirmation. Okay, remember this trade. I told you that you can enter now because the trade was happening while we were having the webinar. So it was up to you. So you could enter here or you could enter a little bit later, 1 hour later. But what happened is the price came close, very close to our entry. My predicted trade was position sell around 57.70. Position trades are trend trades, okay? Position trades are trend trades, and counter trend trades are alternative trades, okay? You know about it all. And he's saying that's how fast we press the buy or sell button. Yes, of course. You need to press fast if you want to put the market order. And this was, you can see the height of the price, 57.60. And we usually enter within 10 pips close if it's close to our predicted price. So you can enter, let's say, with you can split the trade within those 10 pips. So let's say that you enter here within 10 pips of the predicted level, and you can add a half of that trade if the price hits the level. But the risk should be the same, guys. Remember what I'm saying. If you want to be a long-term trader, I don't think, and I don't mean by long-term to trade longer time frames. I want you to be in this business as long as it's possible. So you're a marathon runner. So you're a long distance runner, okay? And if you want to be a long distance runner, you need to keep your risk low, okay? Always remember, banks give you 1% per year, 2% per year. If you make 2, 3, 5% per month, you bested the bank, and you should be happy about it. And you can make that with low risk. So keep your risk low. I know that sometimes we get tempted to put a little bit of high risk, but you can do that if you're pretty much sure about your trade. But then again, even if you're 90% sure that you will win, because we can never be 100% sure, that's normal. Even though we think that we are 100% sure, but we are actually never. Okay, so try to put your risk low. My proposed risk is 0.3 to 0.5. You can go with 1% of a risk per trade, but then you really need to be pretty much sure about your trade, okay? And this was definite winner, okay? Price got very close to our level, 9 pips. Even while we were talking during our webinar, the price got almost 2 pips far from the entry, but the entry happened basically just an hour after our webinar. And what happened is, look, 150 pips to the downside. So this was definitely the best trade. But still, you know, even though if you manage to get 20, 30, 50 pips, it's still good. I know that it's still good. Those were 3 pips. Now let's move to Aussie. So the first position was sell around 85.70, but I also tell you that we could see basically, look at this, possible position short scalp, 85.40, and that basically happened. If you enter this buy scalp swing, this was the buy scalp, which was successful, okay? We managed to get some 20 pips out of this trade, okay? Because the price was rejected. Actually, it was 22 pips possible, but let's call it 20. Okay, so 20 pips from this rejection trade, and rejection trade was definitely a counter trend trade, guys. So this was counter trend trade. Look at the price. It came here, then it dropped to this point here. Look. And then it shooted to the upside. Okay, definitely it was pretty much good, but okay, this was basically before we got trail stopped, 20 pips, and then the price rejected from this region. Okay, it's our position short scalp swing, 85.40, but look, it was so good. Okay, 300 pips, but it was primary scalp position, but it started to fall and it stopped here at this point. So nice 90 pips could have been made, even from a scalp trade, because it fell pretty much quickly to the downside, okay? Pretty much quickly to the downside. Okay, let's move to next slide. The dollar yen, let me check it. Yeah, it was good for plus 15. Basically, it was a rejection. It didn't behave the way I was pretty much intended to do. This was the time of our webinar, and you can see basically what happened. We got into alternative scalp swing, so that was counter trend trade, and it came good to the pip. This was good to the pip here, but look. But what happened basically, it was rejected for some 15 pips exactly before the trade reversed in the trend direction and then broke out of this level and went to the upside and so on, so on. Unfortunately that happened, but 15 pips, it's still not bad. Even though if you made 5 to 10 pips of this trade, yeah, that is good. Okay? Now Nick is saying, this is easy, I make 1% daily. Good, Nick. And keep on doing that, because there will be times when you will be losing. And that is the time when you need to stick to your 1% per day. If you make 1% per day, okay, and you're able to make 30% per month, right? If you make 30% per month, I just don't know how long it will last. Because from my personal experience, every single trader that wanted to make 20 or 30% per month killed the account very, very soon. So it's not easy to make 1% per day, but if you can make it, that's great. I personally don't know anyone who trade without using arbitrage trading or martingale, because martingale is not, for me, that's not trading, that can make constantly 30% per month. So if you can make that, good, but please do this, because I'm talking from my personal experience, and believe me, I've seen a lot of good things happening and awful things happening to great traders. I know personally many good traders from Forex Factory who were so good that they made more than 20-30% per month. And then they had one single losing day and they killed 50% of their account. And they wiped the account in the same month. So guys, and don't talk about $100 or $1,000 or $10,000 accounts. I'm talking about $50,000, $100,000 accounts. Okay? That is serious money. And it's easy to lose $1,000, right? Because $1,000 you can make up for it. $1,000, right? But if you lose $100,000 in a couple of months, actually you started with 60,000 and then you got your account to 100,000 and you lost everything. It's not just about the money. It will be bad for your psychology because it can get you in the spiral of doom. And if you get sucked into spiral of doom, that's basically like vortex. You will be drawn to the support level, and from that support level, that it will be extremely difficult to climb back to previous resistance, previous support now acting as resistance. I already talked about spiral of doom in Forex trading terms, and that is why I always advise you, keep the low risk, because you never know what can happen. You know what banks did a month ago. I wrote about it, and I will use this opportunity, guys. Please, if you didn't, I will show you now. Okay, if you haven't read it already, please go and read it. And that can happen. It's not our mistake. It's not our broker's mistake. It's the mistake of those. It's not the mistake. It was did on purpose. And I hope that that guys will go to jail. Every single one of them who did this. So please go to this link and read this. How they basically robbed traders from good positions. Okay? Please read this if you haven't. Okay? Read this. And that is why I'm talking about this. Sometimes you will lose and it won't be up to you. So you can lose one single, it's a single moment where you can lose account, just not of your, because of you, it's about others. Okay? Yes. And if you risk a lot, as Ahmed is saying, the kind of return is possible by increasing position size. Yeah. And I prefer to follow your conservative risk mind. Yes, definitely. Don't risk, guys, a lot. Please do that. Listen to me, what I'm saying. I really wish you the best. And that is why I'm teaching you all this stuff. Okay? So, dollar yen, let's get back to webinar. It only was good for 15 pips. Nothing better. Well, unfortunately, I hope that it will go a little bit to the downside. But dollar yen is in huge uptrend, okay? And we really need to go with the trend at this point, okay? Let's move on to our next trade, New Zealand dollar. This was the time of webinar, sell around 79.10. So during the webinar, the level was hit. After the webinar, we still got a chance to trade this pair. And what happened, basically, the price hit. So 78.20. It was hit, so you can see this was during the webinar, after the webinar, and the price was hit. So again, New Zealand dollar, great trade. And definitely New Zealand dollar was also considered one of the best trades in previous months, maybe not in the previous week because we had a pound dollar, but definitely it was pretty much good. I like this kind of movement when the price is rejected and then starts going down very fast, because that is the way when we can make some nice money, okay? Now let's see what I have prepared for you for this week, okay? Euro dollar, what can I say about euro dollar? You can scalp 22.95, 22.90, 23.00. That is scalping level, and you could make some scalps here on euro dollar. You can see the potential pattern. This tries to be. Look, this is trying to be basically some sort. If it gets rejected to this region, it can make inverse head and shoulders and go up. But we should not forget that basically we had NFP on Friday. NFP was pretty much good for dollar, and this is NFP Monday. So basically NFP Monday can go counter trend, but we can use counter trend positions to get into better trend positions. NFP Monday can be a little bit difficult to trade because you want to place a trend trade, but usually trend trades can go against you. So I would suggest now that I will draw Fibonacci so you will see what I'm talking about. Okay, let's draw Fibonacci here. Okay, guys. So what I'm suggesting is there were some scalping levels here, okay? There were some scalping zones here. 29.95 price was rejected. Look at this. Now it's trying to go even more to the upside. Good. If it wants to go, then we should let it go. Now pay attention to this. We have basically here a broken triangle, and this was a sort of a triangle, right? Look at this. Now this lower trend line acts as a resistance, right? Now the thing is, where we see historical near-term sellers, where you can see historical near-term sellers here on this chart, we want always to place a line where we can see some selling going on. Before finding sellers, we need to know where buyers were. So definitely this level was buying level. First, this was selling level. Look at this. This was the rejection, then the price broke to this heavily, and then look at this, buying, and this is the spike, which happened after Draghi announced quantitative easing. Look, but then that rumor was strongly rejected, and the price fell here, and on MFP it even fell further. But look at this. So buying, selling, buying, buying, selling. So historical selling, near-term selling definitely happened here around 2350 to 2360. Okay, so that is what I want to see. If we get a price here at this point, I will definitely place a sell trade. Now these are all levels to scalp. You can try a scalp here, 99, 9300, 92, 95. This is next level for scalp. Positional trades can happen here at 2350. Okay, positional trades. Those are not scalping trades. Scalping is scalping. Position is intraday trading. Okay, so positional trades can happen here in this region, 2350 to 2360. So you can. I will try to watch the price here, and if it goes slowly to this region, I will put a sell. If it goes fastly with strong momentum, I won't be selling anything, because it might be again a spike like this. I don't like to see this, but if you see that the price is gradually grinding to the selling spot, you can try to place a sell trade. Okay, so that is my my prediction for euro dollar. Sell around 2350. Stop loss should be at 24, so 50 pips stop loss, but the risk should be the same. Okay, and target price 2250. I'm still, you can see, I knew that it will happen somehow, that the price will be rejected from 2250. Basically, this was not a strong close below 2250. Basically, the price closed at 2248, 49. So this next candle, basically, this is bearish engulfing candle, and you can see where it went pretty much to the upside. And now, what euro dollar can do? It can reject to this region and then try to play to make inverse head and shoulders. But it doesn't mind, even if it makes inverse head and shoulders. This is the level where I will try to short it. Okay. Initially, it should bounce of this level, okay? Pound dollar. Today I made the analysis, guys. Look at this. What can I say? If you read my analysis today, I will refer to my analysis quickly, okay? This was my analysis for GBP dollar. Yes, POC is around 56.40 to 56.50. This was the analysis, and definitely look at the price. It's being rejected. Look, now it's again. I don't like when I see that it was 4 times rejected. No, 1, 2, 3, 4, 5 times rejection, guys. 5-time rejection. Okay, and it still wants to go up. It looks like they want to collect some stops, and it's trying to go. Look at the price now. Now the price is basically driven by euro dollar. Euro dollar collected some stops. Look at the breakout. This was stop triggering. Now GBP is trying to collect some stops because they know that some stops are being held above. And GBP dollar is trying basically to collect some stops, okay, also. So whether it will be the case, I don't know, but the thing is about GBP 5660, But look at this, 40 pip stop loss, okay? 40 pip stop loss, guys, to 55.00. But why 55.00? Because if 57 breaks, I'm not sure that we will see 55.00. So if you want to see 55.00 level, and the price came pretty much very, very close to the level today. Pretty much it came very, very close to the level today. The low was 55.40. So it still wants to grab that 55.00 to test it. But look at this. This was normal trading and price rejections. Now the price is trying to basically break all the stops and get some pips to the upside from traders who are short. So my position is 56.60, but my stop loss is 57.00. Yes, it's 40 pip stop loss, but yet again, if the risk is 0.3 to 0.5, it doesn't matter if your stop loss is 30 or 100. The risk should be the same, because when you open your trade, you're always basing your initial volume traded or lot size according to your stop loss, okay? Adrian, let's see the other slides, then I will answer. Aussie, 83.60 on Aussie, 83.60 on Aussie. Okay, 83.60 on Aussie. So GBP, I want to see if this level gets broken, but still, look, I just don't like when I see this. 5 rejections, and then again, after 6 hours, they want to spike this. This should have been here by now, but look how many rejections of the POC zones. Okay, Aussie, what do I see on Aussie? Again, I see 83.60, 84.00, 83.00. Doesn't give us so great risk to reward, but if the price gets to 83.60, we could try a sell trade from this region. There are some nice buyers there, now there are sellers, presumably, and if the price rejects from this region, we could see 83.00. But yet again, it doesn't go anywhere at the moment. So it's best we should wait for basically some selling to happen. Now it doesn't go anywhere, okay? Yeah, these setups, I will go through these setups again. Don't worry, I will roll on these slides again, so you will actually have the possibility to print screen, okay? Don't worry about it, okay? So Aussie, okay? Then let's go to New Zealand dollar. New Zealand dollar position is selling around 0.7700, 7730, target 7650, 7600 is the second target. New Zealand dollar is basically 7700 sell, because we see, you look at this, we see a trend line here. This trend line, you can extend it like this, and you can see that the price is in the great confluence around 76.00 and 77.00, and it can basically get down from this level. Okay, it can basically get down from this level. So I want to sell. We have a strong selling at the break of this trend line, 38.2 last high retracement, and look at this momentum candle. So I would really like to see this setup happening. 77.00, 77.30, 76.50, 76.00. Okay? So New Zealand dollar is in downtrend. We have inner trend line. You know that this trend line is called inner trend line because it's already been broken. So trend line, inner trend line, 38.2, and previous sellers here in this region. Okay? And dollar yen, guys. Dollar yen, we have a new pretty much strong level, I think, and that is 120.00. So dollar yen is having that 120.00 level. I will mark you the level. Look those rejections, then breakout, pull back, continuation. So this is, guys, breakout, this is pullback, and this is continuation. Look. Do you see this? Breakout, pullback, continuation. This level was retested. Now this is pretty much strong level. Pretty much strong level. When we make a Fibonacci from this level to this double top, we can see basically that we are having a confluence here. 120.30. Previous top, broken, rejection of this level, and if the price gets here, I will buy it for a next leg to the upside. Okay? So if that happens, 120.30, 120.00, 121.50. Okay? Dollar yen. Now I will roll on these slides again and you can ask me questions. Adrian is asking, do you think the current price is touching the trend line which is drawn from the last two low? Which pair, Adrian? Just tell me which pair and I will go through that again. Until then, a GBP dollar. Yeah, I will take a look at GBP dollar. Euro dollar, okay. Set up for pound. Okay, I see that some people are joining in now. Sector. Oh. Okay, for all of you who joined now, there was a mistake on Almer Markets page for registration. We are always having the session recap webinars at the same time. It's 5 p.m. GMT, it's 6 p.m. Central European time. So sorry for that. And I already talked to Almer Market support. They will correct it. So when you sign up for next session recap, you can do that definitely because it will be held at the same time. 6 Central European time or 5 GMT. Okay. Okay, GBP dollar. I will answer your questions. Just let me roll through these slides again. Aussie. New Zealand dollar. And dollar yen. Okay. Now Adrian was asking about GBP dollar. Okay. I will go through GBP dollar now. Do you think the current price is touching the trend line which is drawn from the last two low? Last two low, basically, if you refer what last two low, Adrian? This was the low and this was the low. So last two low, if this, you think about this one. Last two low from this day, right? Yes, it's kind of touching the trend line, but look, it's touching, but I don't like how the price is behaving according to 54.40. Because we had 5 rejections and the price still didn't broke through this low. Okay, so we need to wait a little bit. Okay, we need to. I would like to see price here, 55.84 and 56.23. You think about that one, 55. Let me see. Yeah, but look at this. Look at this. If you're referring to this breakout candle, this breakout candle failed to break through this 56.40. Then all subsequent candles fail until this candle. And now this candle is trying to collect some stops to the upside. So I'm guessing it can reach 56.60, but yet again, if it reaches, stops are at 57 for these kind of trades, and the risk is still the same, 0.3. Okay. Okay. Adrian is saying dated 1st December to 5th December low. Okay, 1st December low to 5th December. Okay, I will mark this like this. Okay, Nadelin is saying chart was cropped, now it's better. Okay. Okay. Okay, the low was of 5th December was this, right? Low, yeah. No, this was 8. This was 5th December low. 56.23. No, it was not the low, Adrian. Low was 55. Let me see. 55.70 was the low. This was the low of 5th December. Look. Okay, this is 5th, this is 8th, okay? This was the low basically. This candle was the low here. Okay? You have basically a double bottom here. The same day, 5th of December. Okay? So if you're referring to this, this was broken out today. Pound is very, very strong. I mean, dollar is weak. And look how basically pound and euro are behaving. But I'm saying again, guys, I'm saying again, these kind of moves can get us better in trend trades. So 23.50 is my setup for euro dollar and 56.60 is my setup for GBP dollar. So these are all counter trend trades. And today is NFP Monday. And today's setup, it only worked for some scalps because 56.40 was rejected, and now it's broken and the price is trying to go up instead of going down, more down to the downside. Okay? So we still need to be patient, guys, for these kind of trades to happen. We still need to be patient. And NFP Monday is usually counter trend. The price retraces in the counter trending direction compared to Friday, okay? So we will see where this will go, okay? Okay? Next question, Aussie. Yeah, Aussie, this is the setup for Aussie. It doesn't go anywhere now, but my setup for Aussie is this. 83.60 sell, 84.00 is stop loss, and 83.00 is a target. Joachim Timovsky is asking. Euro dollar, I will show you euro dollar. No euro dollar, it's euro Australian dollar, okay, euro Australian dollar. Euro Australian dollar. Aussie New Zealand made false breakout, Alec is saying, from range. Aussie New Zealand, let's see Aussie New Zealand then euro. Okay, okay. Aussie New Zealand. Aussie New Zealand, yeah, if you're referring to this breakout, yeah, this is definitely false breakout. And it's falling again. But look, this is actually uptrend. So it wants to retrace to be bought probably again. Okay, yeah, this was definitely a false breakout. Euro Australian dollar. Yeah, Euro Australian dollar is going to the upside. And definitely, if you traded euro dollar, you could spot this one. You could spot this one. I will show you now. And basically from this swing to this swing. So this was basically the confluence point. This was the breakout point. The real breakout point happened after this candle high was broken. So this candle high, this was breakout, and then the price proceeded to go to the upside. Euro dollar is in uptrend, but I won't be making any presumptions about euro Australian dollar, sorry, because definitely I want to see euro dollar as close as to 23.50 to sell. So I won't be making any presumptions about euro Australian dollar, but it's definitely in a strong uptrend, and this was the breakout point. So pay attention to this level if it retraces, okay, to this level if it retraces. 61.8 close, 50 close, so it's 48.11. Pay attention to this level if it gets there, 48.11, okay? Dollar Swissy. Dollar Swissy moves opposed to, it totally counter trend to euro dollar. So if you trade euro dollar, you don't trade dollar Swissy. If you trade dollar Swissy, you don't take euro dollar trades because they are moving inversely. What I can say about euro dollar Swissy, we can make Fibonacci here. The first level, which this is not even a confluence zone. This is not a confluence zone, but this can be a confluence zone. So this is where I see the confluence here. Okay? I have a question. What is the color of your candlestick? I like it. Properties. These are how my chart looks like. So you can copy if you want. Okay? So if you want to copy, please, you can do it now. This is how my candlestick looks like. I prefer to use this kind of candlestick charting, white background, these colors. It's pretty clear, it's pretty good to use, and I really like it, okay? Okay, if you saw it, I will remove it. So this is the confluence for dollar Swissy. Look at this, breakout, but previous triple top. Now, I'm not saying that the price cannot reject of this region, but this is the better confluence. Now, let's see if we have double Fibonacci confluence here. I want to see something. Guys, definitely triple confluence, 78.650. I'm not saying that it won't reject from this region, but for deeper retracement, this is 78.650 double Fibonacci confluence with previous buyers. So this was selling region, and then breakout happens, so fresh buyers are here. Look at this. Double top, look at this. Triple top, look at this. So 97.35, pay attention to that region. 97.35. Pay attention to that region. So 97.35 for all of you who want to see what can happen on dollar Swissy, pay attention to this region and this region. Let's see dollar AUD now. AUD, okay, here. Definite downtrend. It's pretty strong. Okay. Look at this. This was previous swing from this point to this point. This low was broken, so you need to wait for this candle to close and start a retracement before making any Fibonacci retracement. So if you wanted to make any Fibonacci retracement, you could have done from this point to this point. Now you see this is the high, swing high, and you need to see where the price will stop and reverse. That will be your swing low. So you will draw Fibonacci from this point to new swing low. I cannot tell you anything about AUD now because this candle is still live. I can tell you that the price is in definite downtrend, but I cannot tell you because I don't know where the swing low will be. This was previous swing low. This candle is making you swing low, so I don't know. Okay, no problem, Adrian. So these are my chart properties. If you like it, guys, you can make it to look exactly the same. I don't have anything to object. It's up to you if you want to make it to look like this. Even better, because if you use white background with these candlesticks, your chart will be clean and you can see better movement. You can see how price really moves because your chart isn't clustered with many red, green, white, blue, I don't know what kind of color indicators. I really like to keep my chart clean as possible. Okay. I don't like when charts are clustered with many indicators. It just kills price analysis. I don't like to see it really. Nick is saying I use black and white, but this is better. Thank you, Nick. You can, yeah, it's smoother. Definitely, it's smoother. Okay, I hope that you all copied this. If you copied this one, I can basically roll on through slides again, and we can call it a day. Okay, so let's roll on through these slides again. So euro dollar, GBP dollar, Aussie, New Zealand dollar, and dollar yen. Also tomorrow, guys, I will be having a webinar with Forex Street. So for all of you who want to hear and you don't know a lot about advanced chart patterns, I will be holding the webinar at 3 p.m. GMT. It's 4 Central European time. So 1 hour after GMT is Central European time, so it will be 4 p.m. GMT. Basic and advanced chart patterns, you can click here and you can register for the webinar, of course. So guys, it's good to know a little bit more about those advanced patterns which are used by professional traders, okay? So this is all I had for you today. Let's see what this week will bring us. There is definitely some action going on in the markets, but we still need to wait for this is all of this what is happening today. I think that this is all retracement basically. So for proper trend trade we need to see a proper retracement, and I hope that we will see good movement of our favorite pairs. So thank you guys for attending the webinar. I will talk to you soon. Of course, pay attention to tomorrow's analysis, of course, and these trade setups. Thank you, and trade safe.